welcome everybody to the stock market review. My name is Bennett McDowell with traderscoach.com, and it's great to be here. And we meet each month on a first Wednesday at this time. So October is here. All right, let me go through a few quick administrational items, and we'll jump right in it. Give us a like while you can. And of course, you're probably already subscribed, so we're all set there, okay? And as Gene says, go ahead and type your questions in for me in the actual comments area if you have any. All right, so again, we meet now once a month, first Wednesday of the month. So we're here on October 2nd, and our next meeting is November 6th, day after the election. Woohoo! All right, so quick disclaimer. I think everybody really understands the risks involved in trading the financial markets. But in case you don't, if you're new here, there are risks, okay? Nothing's guaranteed in the markets. We work in a realm of probabilities. It is suggested, of course, to use risk control and also trade with money you can afford to risk, called risk funds, okay? Risk accounts. All right, and also, too, there's a lot of firms out there where we like Apex funding for day traders. So if you're any day traders out there, you can definitely check that out. I'll put a link up there in just a little bit in the session here. All right, so I want to go jump right into the markets here. We're only going to be together for no longer than half an hour. Just a quick review. All right, so once again, markets are still moving up. All right, there is quite a bit of volatility in the markets. However, notice here that very simply, what we've done is draw a trend line on some of the longer and short-term trends in the market, and we're above them all right? So really at this particular point, if you follow price and the reality of the price, we are currently in an uptrend. Now, that doesn't mean you can't think that there's a bear market around the corner, because, you know, we certainly do. In terms of one of the types of technical analysis we use called the Elliott Wave, we are in a very bullish Wave 5 target zone that's really calculated back all the way to 2009. So this is a long-term target zone, and we're sitting here right in it right now. And that doesn't mean it can't go up, because it's a zone. So the upper zone is 47,426. And the lower zone, which we're above now, is at 40,281. And the 50% mark right between those two is roughly 43,685. So we're smack really in the target zone, which means that at any time, something could come along and cause the market to shift. Now, when we talk about Elliott Wave, we talk about impulsive waves and corrective waves. So this is the last impulsive wave. And what's really interesting about impulsive waves with Elliott Wave 5s is the fact that it ignores bad news and accentuates good news. And goodness knows that we've had, you know, all this trouble going on in the Middle East, and, you know, the political climate right now and the whole 9 yards, many reasons for the market to sell off, and it has not. So you have to take that into consideration. Overall, however, we do believe in 2025, or maybe towards the end of this year after the election, the market should meet some headwinds and shift to the downside. But again, nobody has that kind of crystal ball. So you stay with the market until these trend lines and levels get broken. And on this chart, I've got three important levels. One is a short-term level at 39,993.07. Another level sits at 38,499.27, and one below that is at 32,327. So the way we're kind of running this situation here is that stay long, and imagine if you go below this short-term level here, most of your position trades will probably be stopped out if you're trailing your stops up pretty tight. The other area here is 38,499.27. If we break below that, that's a significant level, and that's really going to be below the trend lines and also below a key level of support. So at that particular point, the mood of the market will have changed, and there'll usually be something that causes that. And so things will be quite different there in terms of the optimism versus the pessimism of the stock market. If we go below this, then we're kind of at the point there heading down into a bear market. Our projections for the bear market are probably a 50% correction. So it's quite severe because this is a long-term bull target here. So a lot of retracement area below it for it to go. But we also got quite a ways to go before we hit that level. So I wouldn't panic yet, obviously, because we're still in an uptrend. But I would definitely keep in mind that a bear market is probably around the corner, but not here yet. So adhere to those trend lines. And of course, you can draw trend lines on all your significant holdings. And when those get broken, of course, start to lighten up. Now, one of the things you could do, of course, is go ahead and talk to your financial advisor at this point, have a game plan for when things and if things reverse. All right, on the 60-minute chart, drawn, of course, last Sunday as well for our market opportunity report, folks. We do this every week, of course. We're sitting in the target zone, expecting a little bit of a pullback at some point. But again, we are above the trend lines there as well. Long-term monthly chart. This is an extremely long-term chart for the Dow Jones Industrial Average. And on this chart here, every price bar represents a full month. And we're currently still in a major wave 3 on the monthly chart, basically a weekly wave 3, a daily wave 5, because those are waves inside waves. So the bottom line is the next bear market will be a wave 4 on the weekly chart and a minor wave 4 on the monthly chart. That's kind of what we're thinking at this particular point. So probably a pretty good size correction coming up. All right, on the S&P again, we're still in the up mode on this as well. And we're in the target zone, but again, still above all significant trend lines. So everything is looking still very similar to the Dow Jones. If we go to the NASDAQ market, all right, then of course you can certainly see above all trend lines there as well. And we even have some green PTFs sitting here on some of the charts. And the PTF basically has about a 75% probability, which indicates that whatever the highest price is in that green area, which is the recent all-time highs, all right, there's a 75% probability of exceeding those. And if you look here on the long-term chart for the NASDAQ on the far right-hand side, that we are not quite into the target zone. So I still think we have some more leg room up into that target zone. So I don't see anything falling apart quickly in the markets, at least until we meet again. But anything could happen. Keep that in mind. And of course, this is an election time coming up. So I know a lot of people on YouTube are talking about a crash and a bear market. I don't necessarily disagree with that, but not now. All right. I don't think we're going to really have that until probably in the latter part of this year or 2025. But obviously, if you follow price, which is what we do, the trend is your friend until it breaks. OK, so just stay with the actual trend and keep your stops, fairly close, because things could reverse at any time, especially on Dow stocks and so forth. NASDAQ stocks, of course, look pretty good. And of course, you got things like Tesla doing well and some of the big boys. So keep that in mind. All right. Any questions on that? I'm going to get to some live markets here. Now, just so you know, Antonio, I see you're here. Good to have you here. Tomorrow, we do what we call Stock Analysis Friday. And we look up markets that you want me to look up on that day. This is pretty much just a forecasting situation and keeping an eye on the major indexes. But tomorrow we have that, and we start at 8:30 a.m. Pacific time, and we're there for a good solid half an hour or so. But we basically look up everybody's stock. So that's a good place to go if you're interested in having me look up gold, silver, or gold versus the USD, okay? Things of that nature. All right, so keep that in mind. All right, so let's see what we nice to see you again too. All right, so let me just keep going here. On the real estate front, because we do like to cover that. This is the Case-Shiller Index versus the CPI. So the Case-Shiller Index graph is in red, and that's the red line here. And that measures average home prices in the United States. So real estate's very local, and so some of your areas may be a little bit different, but this is the average across the U.S. going back 50 years. So the CPI is the black line under that, and that's measuring inflation back 50 years. And so when you look at this graph, obviously you see the red line pretty much above the CPI at all times, and there are certain times when it gets really far away from it and then pulls back. But the bottom line here is that housing, if you go back to the 1970s, was a great hedge against inflation and therefore a decent investment. Unlike when you buy an automobile, you buy that, it depreciates as soon as you drive it off the lot, right? Not so with housing. However, housing can fluctuate just like any investment. But the bottom line is that for most people, especially young couples, when they can afford it, a house is really a great thing to do because it gives you a place to live for one thing. And also it is an investment because it will and should keep up with inflation. However, there are times when this CPI or housing, just like any other market, like stocks and equities or anything, it gets at times bubbled, all right? In other words, it gets overdone in one direction. And we saw this during the financial crisis here. This is where they had all the problems with the loans that people really shouldn't have gotten because they couldn't have qualified for them. But basically, if you could breathe back then, you could get a mortgage. But in any case, eventually, that caught up with everybody and you had the crash, you had a recession, people lost their jobs, couldn't make their payments, and the market corrected and it was kind of a nightmare, so to speak. And it took a long time. So what was interesting about that crash is we stayed in this bubbled area here for about 1.5 years, almost two years. And then the unwinding took quite a while because real estate's not as liquid as stocks, so it takes a little bit longer. And then basically it's influenced by interest rates and so forth, just like the stock market. And then you get a turnaround and you start the next move. But these cycles in the markets, from a mania bust to a bear to a bust again, basically occurs over and over again. It's all part of human nature. But look where we are now. Now we're way up here and the CPI is way down here. And this spread here is probably twice as great as this spread down here. So that is kind of a bit of a warning sign for all of us that something here has got to give. Now, inventory has been increasing across the United States. In places like Texas and Florida, it's increased more than in places like California and New York. So therefore, you're seeing prices come down in Texas and Florida a lot more dramatically than other areas where inventory is still remaining fairly high. The problem is that sales are extremely low. I think I read somewhere that sales are almost at a 20-year low. So even though prices have remained at the levels, the actual transactions at those levels are extremely low. People that are selling homes are having to bargain, of course, a lot more than they were used to many, many years ago, like 3. All right. So things are a little different than they were. So when sales actually do occur, you're going to find that people have come down somewhat on their price. It still hasn't hit an area where the inventory has grown enough, all right, to really cause prices to come down dramatically. And yet at the same time, there's not that many sales. So prices kind of just remain up there. All right. Now, the other thing that's kind of interesting with that is we're coming off the buying season. However, this is still, people still buy homes this time of year, but it's not as robust as it was in the spring and during the summer. But sales are low right now, really low. Mortgage rates have come down, but not enough to spur the home buying. And it's simply because the homes are still so expensive. So you've got this kind of interesting scenario in the real estate market where your house is still extremely valued, but yet at the same time, if you tried to sell it, you probably would not get the price in which you think you would. So that's kind of where we are in the real estate market. And interest rates aren't doing too bad. All right, so here's the situation with interest rates. 30-year fix is 6.22, even a little bit lower if you refinanced it. But they actually were lower last week and then popped up a little bit. So the Fed cut, 50 basis points a couple weeks ago. We'll see what they do towards the end of the year here in a little bit. But we do have an election coming up, so it's going to kind of be interesting nonetheless. All right, so looking forward in the real estate situation as a nation, I would say asking prices are down slightly. Inventory is up. Homes are sitting on the market longer, and we're seeing a rise in price reductions from last year. Not dramatically, okay, but they are up. We are moving towards a buyer's market, but it could look a lot worse if inventory was skyrocketing. And inventory is increasing, don't get me wrong, but it's not at certain levels in places like California and New York to really cause prices to come down. All right, and every housing market is different, as I already mentioned. And so, if you compare inventory in California and the Northeast part of the U.S. is down greatly from 2019, whereas inventory is piling up in Texas, Idaho, Florida, and Tennessee. So those prices in those areas are coming down. But again, there's just not a lot of transactions. And the other thing that happens when there's not a lot of transactions is when a transaction does happen, it can affect the Zillow rating, so to speak, because if you're only getting a handful of corrections or sales, and they're lower, they're going to bring down those prices dramatically. Whereas if you had a robust amount of sales, it would be a more normal curve, so to speak, and probably not as dramatic or volatile. So kind of interesting stuff going on here. All right, so I just wanted to cover that. Also, too, just a little bit on books. If you want some books on money management, I have those here. I'll put some links up down in the recording area. My newest book, The Art of Trading, being published by Wiley, is done and it's completed. 580 pages, should be out by the end of the year, they're telling us, but it's in their hands. My Elliott Wave Technique Simplified, published by McGraw-Hill, is out. And it's a very good book on the Elliott Wave if you like that. And of course, we have software tools like the Art Owl, PTF, TLM, and ERI, along with scanners and risk control. All right, I'm going to jump out of here real quick and go to some charts here and take a look at some of the latest indexes. So on the Dow Jones Industrial Average, the chart I showed you with all the levels before was done on as of close of business Friday of last week. So we just got a couple more days of data, and we're pretty much in, way above the trend lines. We had a little bit of a pullback, but nothing dramatic right now. We're kind of in this little area where we're kind of just trending here above the trend line. So again, I know a lot of people out there, if you tune in on YouTube, are talking about sell everything, crash is coming, et cetera, et cetera. But if you follow the market, all right, you're not going to miss the big event when it comes. But by the same token, you're not going to be jumping out of stocks too soon. So use the trend lines, when the trend is done, then that's when you get out. Otherwise, sometimes trends can go a lot longer than you think. And, some of these guys were saying jump out of the market 15 and 20% ago, so to speak, years ago. Okay, so remember that, all right? Just follow the trends. And look here, we have a green PTF here. So probably more short-term highs coming in the next probably week or so. And it may have a pullback, of course, but it should be followed by more highs. So I don't see the market turning around yet, okay? We'll let you know when it does, but certainly not quite yet. And on the S&P, you're not going to see much different on the S&P nor the NASDAQ. All right, especially the S&P, because that's, basically going up, and it has some of the major NASDAQ stocks in it anyway. But again, here we go. Okay, we're still above the trend lines, a little bit of a pullback, but nothing to be concerned about. And if we go to the NASDAQ current day situation, same type of thing. Okay, so our pyramid trading points on the weekly charts are still active, haven't been stopped out. This one was here on the daily chart during this pullback, but now we're seeing some more movement up, and we have a green PTF both on the daily and weekly charts, which is, again, this indicator down here indicating more highs. So I don't think the bull market is done yet, and that's what I want you to take away from this session today. Let's take a quick look at a couple of things I do want to show you before we go here. And one of them, I'll just give you the ETF on crypto, on Bitcoin rather, GBTC. And this is one that's pretty popular amongst a lot of our traders. And, classic Elliott Wave 3 up here. All right. A nice A, B, C correction here. And we're thinking we got a wave 4 in, which passed the way up for a wave 5. Now, let's draw in some fibs. So if we grab a fib here and here, you can certainly see at this particular point, let me just redraw that a little bit to represent a 2. So we've got a wave 4, this price bar back in here. That hit a low of around $49.73. So that brought the actual BTC, down into the 40,000s area, which was quite significant considering we were up around 67,000 in March, right? So that washed out a lot of weak hands, which is exactly what the market does. And I would look at Bitcoin right now as any time you can pick it up in this target zone, it's a buy. Many people would be selling, but if you understand the market dynamics, this would be a buy area. Now, of course, if it heads down and we go below here, then that changes things. But anytime we get into this area here, all right, we saw a rebound here, we saw it here, we might go back into it again. But the idea here, I think that is a great buying opportunity. So where's the target on Bitcoin will be the next question. Well, that target here, we'll again draw in using our fib extensions, and it's around $71.37 roughly, all right, to $91.48. So that's our next major high target. And when could that come? Well, it depends. It depends if this bottom holds and we get a turnaround, because if we get above there after a turnaround, we will probably get acceleration. And so we'll probably get there sooner rather than later. I'm saying, let's say by the end of the year into the first quarter of 2025, if we can break above here this year, the next, let's just say, couple of months, then we could see some real acceleration up and be starting to edge on up towards the end of the year into 2025. So again, we're bullish on Bitcoin. A little bit of volatility has given an opportunity to buy it. Some people have held it, and that's okay. All right, but these are buying opportunities if you want to add on to your holdings. The PTF over here is bullish, indicating there's a 75% probability of Bitcoin returning and making new highs. So I'm pretty confident as I can be in the markets that we will make a new high. But again, you have to have a certain level that you're comfortable with getting out. The higher the trade size you have, probably the more fearful you'll be if it comes down and goes below this previous low. So just be aware of your trade size, not to freak you out, so to speak. All right, let's take a quick look at silver. Antonio, I think you wanted to look at this one too, and this is a good one to look at. So on silver here, we'll just use the silver ETF here, but basically we're bullish on silver, all right? And we had a pull down here, 3, 4, 5. So we're heading on up to the target zone here. Again, a buying opportunity here, not a selling one, buying. And of course, with our pyramids, we were getting in a lot earlier than that. But the idea here on silver is when we hit this target, this will probably be the end of this move up on the actual weekly, and then we'll have another correction and then probably another move up. But this is a short-term significant high here. So if you're position trading this and not long-term holding, you probably want to exit here and then try to get back in after the move down. So just kind of food for thought there. If you're a long-term silver holder, well, the problem is that once this top comes and we have a break, it could be a year before it moves back up. So you always got to be careful about that. All right, let's take a look at gold, and we'll use GLD for that. And gold has been moving up, and we've been bullish for gold for quite some time. The original target on gold was 220. Then we had to revise it upward, and it's at 245. But again, it doesn't matter. Why? Because you follow the trend. See the trend line? There was no reason to get out of it, even once it hit the 220 area that we were expecting a reversal. It didn't happen. So you stay with it. You always follow the trend. The trend is your friend. So gold is moving up, and we're getting a fairly significant new push up here. So I, would stay with gold as much as you could. Now, will we get a correction? Yes, we will at some point. But again, not quite yet. All right, USO. Let's take a look at a couple more before we call it a day here. USO is the ETF for oil. Oil's been kind of a mess. And I mean, look at the chart in the middle. I mean, very messy, roly-poly. So we've kind of relied on the longer-term chart, the weekly chart for this. And we're hoping we have a bottom here at this area here. All right, but we've kind of skidded along for quite some time. Our target, if that bottom holds, is here between 144 cents up to 126.20. So that's kind of where we're thinking we're going with this. All right. So I would not necessarily recommend it as a buy right now, but I do think if you're in it, stay in it. Have your stop at the bottom here. And this roly-poly markets, can't last forever, but it certainly could last a little longer. So you do have to be careful about going in it now and then getting stuck in a sideways market. All right, UNG, natural gas. Let's take a look at that one. Now, natural gas, we have been waiting, and we have been waiting, and we have been waiting for some form of bottom. And I think we may have found it, okay? So we're kind of a little bit early getting in, but we're in. And we're kind of, we think this is the bottom here, okay? You had it before here, came up and went back down. So actually, when you have a situation where you have one more kind of hook down, that even makes it more of a confirmation. And then you had a double bottom here and then a pull up at this point. So looking pretty good. We have a green PTF indicating we should get above the $22 mark, which is this high here. We've got bullish divergence building like crazy in the weekly chart. We've been stopped out of our short trade that was basically over a year old here, okay? 2 years old, actually. And now we're kind of basing and moving up. So it's a little bit early on the weekly chart to get in, but because of the green PTF on the daily chart and the fact that we have a double bottom here that held for the most part, okay, then that was a pretty strong signal. So again, bullish on UNG, which is natural gas ETF. And then the final one for today to look at is TLT. This is the bond market. All right. And as much as I'd love to go long in the bond market, I can't really do it in a long-term situation with the PTF still being red over here on the weekly chart. So again, TLT, we've been looking for a bottom here, and we're hoping we would have it. We started turning yellow. You see where it turned yellow, which is neutral on the PTF right here, this little area here. We had bullish diversions, and then it went red again. All right, so now, it's been kind of a roly-poly market. So the best outcome with a red PTF based on our analysis, is possibly getting as high as this correction zone, which would be a wave 4 in a downtrend that's not over yet. Okay, we were hoping that this was a wave 5, but it's not. It's a wave 3, we think. This is a 4 and this is a 5. So I don't think TLT is a buy here. And we're expecting it, however, it possibly could go to 110. We're at 97 to 128. So if you're a short-term trader, that may be something you might be interested in, but just not seeing it, okay, for right now. So we'll keep an eye on that. If that PTF changes from red to green, we'll change our outlook. But for right now, we think maybe some more lows in TLT before we see a turnaround. All right, so that is it for today. I want to thank everybody for coming. Hopefully that was helpful. We'll be back next month, and we appreciate you being here. Give us a like. And tomorrow, or rather Friday, we have Stock Analysis Friday, and that's at 8:30 a.m. So please join us there. Bring your stocks. And if there's something you're thinking about buying, or you want to kind of have a feel of where it's going, or maybe where to put your stop, that's the whole purpose of Stock Analysis Friday. It's a lot of fun. All right. Thanks, everybody. Thanks for being here, and we'll see you back here next month.